Welcome to the week ahead for financial markets. It's Mike Smith, Senior Analyst and Head of Client Education and Trading for Go Markets, to lead you around things that could happen this week, may impact on market sentiment. As always, we've chosen 5 market moving factors we think could be influential. Let's start with the first one, of course, US markets whipsawing, volatility very high on the back of uncertainty about several things, but of course, tariffs and trade wars are top of the list. We did actually see an up week last week, though the day-to-day swings are visible on any chart. If we just check in on the S&P 500, and there you can see the degree to which volatility has spiked. Normally we are around and about the 55 to 60 volatility per day, and by the end of the week last week we were at 240, so a significant rise in volatility, of course, which you can see in the VIX also, still very high as evidence of investor nervousness. Of course, the major reason behind this is the tariff roller coaster. Of course, we had lots of action on the tariff front last week. We had tariffs come on and then a pause put in place, and then we had reciprocal rise in tariffs between the US and China, which continued in the tit for tat behavior between the two main protagonists, Trump and President Xi. We did see some exemptions come in at the back end of the week on mobile phones, for example. Of course, one of the big factors always on market sentiment is US earnings. We started on Friday in earnest with the big banks kicking off Q1 earnings season. And to be fair, the results came in favorably. The problem is, of course, with all the uncertainty in terms of the Fed and potential rate cuts, as well as the impact of tariffs on not only trade but also inflation, it may be that companies express difficulty in articulating forward guidance that is positive. Markets will respond to this, as well as the rear view. How did companies perform in Q1? If forward guidance is uncertain and poor, markets are unlikely to respond well to that. Watch as we see earnings ramp up during the course of the week to the market response. Gold, of course, remains a flight to safety. The safe haven precious metal continues to fly high, staggering 3,200. We seem to report on this weekly as it reaches the next key level to the upside. Expect more as not only a flight to safety, but also as the US dollar continues to look very weak. In terms of data this week, it's a relatively quiet week, but probably the highlight is on Wednesday. We've got Chinese GDP coming out. We are expecting a slight tick down from the last reading, down from 5.4 to 5.2%. If it comes in at expectations, then that'll keep the markets happy. If we see anything softer than that, then questions once again will be asked about how healthy is the Chinese economy and the impact that that may have globally. So, as always, lots going on, and the likelihood is we will see continued volatility. And of course, you can keep up to date with everything that's going on and how to position yourselves in live market updates that run every day at 12:30 p.m. And of course, we have our inner circle every Wednesday, a special session with a deeper dive on something related to trading and markets. Either way, we're always happy to help. Our support team are ready and waiting for your call if at any time you need to connect. Trade safe and see you again soon. Bye bye for now.